Look, okay, so it's Mark Yusko. I am the founder, CEO, and capital management. Founded that 17 years ago. I came out of the endowment space. I ran the University of North Carolina at Chapel Hill's endowment, and then formed Morgan Creek to bring the endowment model of investing to others. And our big byline is two things. One, alternative thinking about investments. There's this whole idea that there are alternative investments. There's no such thing. There are stocks, there are bonds, there are currencies, and there are commodities. That's it. Everything else is a derivative of that. But you want to integrate alternative strategies, alternative ways of thinking about investing into a portfolio. And the second is that innovation is an asset class. And those who overweight innovation are the most successful investors, bar none. And it's my pinned tweet on Twitter, at Mark Yusko, if you care. The greatest wealth is created by investing in something that you believe in before others even understand. And, God rest his soul, David Swensen passed away, no relation, a couple weeks ago. And, he was the father of the endowment model and a big person who believed in this innovation as an asset class. Over 22% of his portfolio was in venture capital. And so it's something that we've always done: overweighted venture, overweighted new ideas, overweighted innovation as an asset class. Because ultimately, without innovation, you don't have stocks, bonds, currencies, or commodities to invest in. And that's how I got so excited about this space. 4 years ago, launched Morgan Creek Digital, operating subsidiary of Morgan Creek Capital, and have launched 2 venture funds. We're just starting our 3rd fund. Just about to do first close on that at the end of this month. And that's to back early stage projects in the ecosystem around blockchain technology and cryptocurrencies. And then we also invest about 30% of those funds in cryptocurrencies themselves, into the tokens themselves. We also have a risk managed Bitcoin fund designed to truncate the volatility. One of the things that keeps people out of these assets is too much vol. We came up with a strategy to truncate some of that downside vol, because upside vol you'll want. In fact, I have a shirt over on the credenza there. It says, "Embrace volatility." Volatility is your friend in investing. You get paid for taking intelligent risk, and you get paid in the form of volatility. You want high volatility. You just don't want downside volatility. And I use this example all the time. So Bitcoin has the exact same volatility as Amazon. Okay, over 21 years, Amazon.com has had 80% volatility, same number as Bitcoin. Bitcoin has compounded 223% per year for a decade, and Amazon has done about half of that over their 21 years. And what's crazy about it is Amazon has a double-digit drawdown every single year, including this year. The average drawdown is 31%, 5 times more than 50%, twice more than 90%. How many people bought Amazon on the IPO 21 years ago and hold it today? There are 4. Jeff, his mom, his dad, and now his ex-wife. And when was the right time to sell Amazon? That would be never. And the same is true of a lot of these projects, whether it's Bitcoin, Ethereum, some of the DeFi stuff we'll talk about. You want to own these assets literally forever. And I just posted a clip I was on CNBC in 2019. And I think Bitcoin had crashed, quote unquote, from like 10,000 to 8,000 or something that morning. And I came on, they're like, "Oh, what should we do?" Like, buy it. Like, what do you mean buy it? Like, buy it today, buy it tomorrow, buy it next week, buy it the week after. And you should accumulate ownership of these networks. The most important thing for investors today is to own the networks, because the networks grow not linearly, but parabolically, exponentially. And the average person is just sucky, it's a technical term, at math, right? If I say what's 2 times 2, everybody on the call, 4, no problem. If I say what's 17 times 23, I'll wait. Average person can't do that, right? In their head, they need a calculator. So if I say, how are you at nonlinear logarithmic regression? Not good. But that's the way networks grow, according to Metcalfe's law. And I use the example just to simplify it. If I take 20 linear steps across the office, I get the other side. If I take 20 exponential steps, I go around the world twice. So I get to pass some of the people on the phone from Singapore and Sweden and all the rest. So that's a lot for the intro, but we can start there and go wherever you want.
Nice.
Yeah, that's awesome. Thanks for those insights. And yeah, I didn't think of it that way, but yeah, you cross a lot of those people on this call. But
give my
yeah,
high five as I go by.
But investing into the networks, and absolutely, I agree with you 100%. And also, kind of the big point to make during this keynote is, why and how is this disrupting finance? Why is decentralized finance like disrupting everything? And I know you've mentioned on previous interviews that you've had, but like, how is Wall Street looking at this? Like, what is that big picture that you're seeing?
With gigantic, huge eyes and fear. Look, blockchain technology is going to do to finance the same thing that the internet did to media and information and commerce. And this is an innovation in technology. It's an evolution of technology that's been going on for decades. This is not new. This is not, scary or something that, came out of the blue. This is a simple evolution of an operating system. So computing started back in the 50s. We had these things called, government computers. And suddenly the mainframe computer was created in 1954. You had a chance if you invested in some crazy companies like IBM or DEC, or my favorite, Wang, and you could invest in those companies and make a ton of money. And people could finally get a computer. And then 14 years later, you had an innovation called the microchip. And suddenly you could have smaller computers. It wouldn't take this whole building. It could be just the size of this room. And that was pretty good. And Sun and a few others came along and started building mini computers. And then 14 years later, interestingly enough, it's always 14 years. Why is that? I think it has to do with the creative class, and all innovation really comes from young people because they don't know what they don't know. And so they try new things. And I grew up in Seattle. So a bunch of my friends don't work anymore. They were smart enough to go to work for that little company called Microsoft. If you've ever seen the original picture of the Microsoft 11, you'd cut me some slack because they were a little rough. Now, we were all rough looking in the 70s, but they were rougher than others. Google that tonight. Look up the original Microsoft 11. They're all super rich and they're all very interesting people, but I didn't go work there. Now, Steve Ballmer's mom famously quipped, "Honey, why would you work there? No one's ever going to want a computer in their house." He has 18 billion reasons he was right, mom was wrong. So 14 years later, the internet. And at the beginning, I was saying, what is crypto? I was kind of doing the Bryant Gumbel from the Today Show in 1996. What is internet? What is that little @ symbol? And Paul Krugman famously quipped, "It'll never be more important than the fax machine." Maybe it's more important than the fax machine, maybe. And so 14 years later, we had the mobile net. And the mobile net was big, right? The internet was big, and it basically totally transformed commerce. And I use a simple example of email, right? In the old days, I wanted to write a letter to my girlfriend. I wrote a letter, put a stamp on it. I sent it out. Took 3 days to get there. She thought about it, wrote back, put a letter in there. 7 days later, I get an answer. I joke, my wife can't wait 7 seconds to get a response to a text. 7 days? Are you kidding me? No way. Now, what if I wanted to send multiple letters to multiple girlfriends? Well, I had to find a Xerox machine, a bunch of dimes, and make copies of the letter and find a bunch of stamps and put them in. Okay, it's hard. But what if I want to say something different to each girl? Well, then I had to cut and paste and make different letters and send them out. Email came along. I could do that instantaneously with the push of a button to millions of people. Now, if you think about what happened over the course of the next 14-year cycle between the internet and the mobile net, I remember being back in Seattle, Craig McCaw's house, for a venture capital event. And I asked his family office guy, "Do you think the mobile net is going to be as big as the internet?" He's like, "Mark, are you kidding me? Ask people if they want a computer." Like, no, not really. Ask people if I want a cell phone. They're like, "I already have 2. I don't need another one." All right. So yeah, the mobile net is bigger. There are 10 billion of these supercomputers. They call it a phone. Why? We don't use it to talk, but it's a computer. This is 100 times more powerful than the first computer I bought from Michael Dell's dorm room which I should have saved as a collector's item, but I actually bought it from his dorm room at University of Texas.
Wow.
And yeah, called PCs Limited.
That would have been an awesome NFT by now.
Oh, I know. That's a good point. I should have done that. But I wonder if I could go back and find the original receipt. That's a good point. So what's amazing about that is this totally disrupted all of information exchange, all of media, all of commerce. And Amazon is a perfect example, right? Amazon was a joke. I remember a cover story, 2005, Business Week. Jeff, go mine the store, because he was starting this little thing called AWS and people didn't get it. He believed in something before others understood, and it's become worth many, many billions of dollars. First $1 trillion company. Now, what's interesting is Bitcoin got to $1 trillion faster than Jeff. Took Jeff 20 years, took Bitcoin only 10. So that's pretty cool. But the point is that 1996 to 2010 was big because we started to go at the knee of the curve. Again, linear math is different than exponential math. If you think about an exponential curve, XY axis, the parabola on the left-hand northwest quadrant, the area under the curve to the left is Web 1.0. Okay, the area under that curve parallel to the x-axis, it's kind of big, but not really that big. But that's Cisco and Intel and Microsoft. It's pretty real wealth. Then you get to the knee of the curve. That's Web 2.0. And that is Alibaba and Amazon and Netflix. More wealth, first $1 trillion companies. Now we're going to the area under the curve where we go parabolic to the y-axis. That's Web 3.0. Big. First multi-trillion dollar companies, first trillionaire are going to come from Web 3, from the Internet of Value, or the Trustnet, as I call it. So 2010 was the mobile net. 2024, still 3 years from now, is the Trustnet. That is the Internet of Value, and money over Internet protocol, value over Internet protocol, is the biggest innovation I'll see in my lifetime. I plan to be here a long time, but it is the biggest innovation. And this right now, what we are living in, is the greatest wealth creation opportunity, bar none, of this century. It is going to create so much opportunity and so much wealth and so much value by allowing us to take every stock, every bond, every currency, every commodity, every piece of art, every business, every collectible car, every bottle of wine, everything, 750 trillion. Okay, trillion. Somebody, one of you guys just shudder a little bit when I use the T word. A trillion, 1 trillion. We'd have to sit here together for 31,710 years, which I promise would be most unpleasant, and spend $1 every second for 31,000 years. That's 1 trillion. I'm talking 750 of those babies. All of it is going to be digitized, tokenized, trade 24/7, fractional ownership, and the exponential growth that will come from that boggles the mind.
So
and
Mark,
the average person has no exposure.
That's amazing. And just to put everyone into context, that's a massive number. And you almost have to think about where we're going, but also what are we leaving behind? Like what are those systems and legacy systems that we're stepping out of?
Yeah. And COBOL, Fortran.
Yeah.
Think about this. The legacy financial system today, a whole bunch of it runs on COBOL and Fortran. There aren't even programmers that can fix the legacy systems. It takes 30 days to settle a bank loan. 30 days? Are you kidding me? It's because there are 7 legacy systems that all have to talk to one another and settle. Like we invested in this cool project called Provenance Blockchain, Figure Technologies, and Hash Token. And here's the thing, DTCC, okay? Every day we use DTCC. If you want to trade a stock, a bond, this is crazy. There are physical pieces of paper in Dallas, Texas, physical stock certificates that sit in file drawers. And if I have one, and here's the crazy thing, we actually don't own all these assets that we think we do. So I have a stock, right? No, I don't. I have an IOU from my UBS broker. The stock, the certificate sits in DTCC in broker street name, UBS's name, and I trade it to you, Ivan, and it goes to the Merrill Lynch account. Okay. So they pick it up out of the drawer and put it over in this drawer, and you and I trade a QSIP, electronic QSIP. That needs to be totally redone digitally. And that's what Provenance is. And that's what the hash token does. It will take this $1.8 trillion a year transaction platform that is analog and electronic and move it to the digital age. And everything in the world is going from analog to electronic to digital. And as we make that transition, what gets left behind are these legacy systems, these middleman systems, or middle person, I guess, since it's middleman and middle women, but middle person systems that will be disrupted. And it's all because of a very simple concept of triple entry accounting. And that triple entry accounting construct, and taking a computing network, the largest, most secure computing network in the world, in the history of mankind, Bitcoin, 1,500 times more secure and more powerful than the CERN supercomputer. We've never seen a computing system of this order of magnitude ever in history. And it is creating the base layer for trust and truth. And all of it is superior to the system we have now, which requires a middleman, right? If I want to send Jeffrey money, he has to have a bank account, I have to have a bank account, and the bank takes a fee. And if we take it across international borders, like to some of the people on the call, then the Rothschilds have to get paid because they own the two banks, which, using a 400-year-old treaty, still get paid every time money goes across an international border. What? How is that possible? Okay. If I have a Bitcoin, I can send it anywhere in the world immediately for free. Now, it's not necessarily free, and free is the wrong number, by the way. We need to have payment rails that take money. But whether it's Strike that we're an investor in, or whether it's something different, that ultimately we're going to move capital around the world in a way that's superior to the way we do today, which nobody has money, right? We have ones and zeros. We have electronic entries in banks, trusted middle people. And we use payment rails like Visa and MasterCard, which are really just fancy spreadsheets. I mean, what does Visa actually do? They take my transactions over the course of the month and they settle up once a month. It's just batch processing. But it's convenient, and I like it, and I use it, and I don't carry money. But in the future, all of it will sit here, and actually won't even sit here. Imagine this future. You're sitting in the back of your autonomous vehicle, right? We won't actually drive. And by the way, Elon promised us 1 million robo-taxis last year. I'm calling bullshit. He promised us 1 million this year. I'm calling bullshit. He will never make money selling cars, not ever. The only way he makes money is by trading Bitcoin. So to trash Bitcoin, all he's doing is trying to buy it cheaper. I mean, this is the age-old trick in the book, right? If you want to buy a big block of something, you go out publicly and say it sucks, so the price goes down so you can buy it. So anyone selling to him is a dork. But the key is that I even lost my train of thought. I got so upset about Elon.
You know what you're saying about these like legacy systems, and I know you mentioned Amazon, and I would even say it applies to not just payments, but like healthcare. There's a lot of traditional tech that's going to be leapfrogged because of this.
Yep. Look, blockchain technology. Just one quick. Blockchain technology is simply the operating system for the Trustnet, where we trust a single source of truth, a single public ledger for everything. I'll give you a perfect example, real life example, real time example. So I said, my mom, a whole family got COVID over Christmas, including my parents, 81 and 83. And the doctors were so freaked out that these older people had COVID that they missed that my mom actually had something wrong. She said, I had pain. Oh, that's just COVID. That's just COVID. No, it wasn't COVID. It had nothing to do with COVID. They had left a stone in her bile duct when they took out her gallbladder. And so the doctor comes in and says, if this keeps up, we might have to have your gallbladder. She's like, are you freaking kidding me? I had it out 3 months ago. That's why I have the problem. Because I don't know if he didn't read the file or if they had a bad file, but that should never happen. And that can all be fixed with blockchain technology. So all of the applications, from healthcare to finance to payments to voting. Oh my God, voting. We should know the moment the election's over, precisely who won to the single, 1/10 of 1% or 1/100%. It's just silly. But legacy systems don't go away easily. They like getting paid, right? And so everybody says, well, why are the banks fighting so hard? Why does Warren Buffett say it's rat poison? Or Charlie Munger one-ups him. Oh, it's like trading newly harvested dead baby brains. WTF, Charlie. Seriously, that's what you're going to say about Bitcoin? It's like trading newly harvested dead baby brains. Why does he say that? Because, well, one, he spent no time on it, so he doesn't understand it. But two, because the more hyperbolic you are, the longer you can try to protect your legacy system. And Berkshire owns 46% legacy financial institutions. They don't want them to go away, but they're going away. Nothing they can do about it.
Wow. Mark, we preface this with this is, nothing here is to be construed as investment advice, but you said the greatest investment is something you believe in before everyone else does. What are some of those networks that you see being built up currently that is going to be the future of blockchain?
I mean, look, the easiest is the protocol. So what people need to understand about Web3 and about the future of finance is that what we're doing is we're creating this new thing, the Trustnet, the same way we created the internet. So when the internet started in the 60s and 70s, it was a government project and there were 80 protocols. And from that 80, today we have 5, right? We have TCP/IP, which we're using right now to talk. Then we have SMTP for email. We have HTTP for websites. We have FTP for file transfers, and we have www that kind of pulls everything together in World Wide Web. So we have all these protocols and they're all fighting for space. And today we have Bitcoin, and Bitcoin is the base layer like TCP/IP. It won. How does it win? It won because of the law of increasing returns. The law of increasing returns, Paul Romer won the Nobel Prize 2 years ago for this, says it's not the best technology that wins. It doesn't have to be the best. It's the one that gets the network effect the fastest. So once you get to critical mass, you're unassailable. And in an open source world, you're even more unassailable because you can just copy paste anything to improve your chain. So Bitcoin wins TCP/IP. Ethereum, absolutely www. It is the toolkit of the Web 3.0, of the Internet of Value. So great. So then FTP, Filecoin probably makes sense. Then on the second two, I can make an argument for Polkadot. I can make an argument for Cosmos and Tendermint. I can even make an argument maybe for Solana. But we're going to end up with 5 protocols. Then on top of that, we're going to build second layer stuff. Like Lightning's going to come on top of Bitcoin, and we're going to use that as a payment rail. And then there'll be applications built on top of that protocol stack, the same way that applications are built on the top of the protocol stack in the internet. The problem with the internet was Tim Berners-Lee, who invented the internet, didn't get rich, right? He invented the freaking internet, not Al Gore, Tim Berners-Lee. Now, Tim's doing fine. He's a professor at MIT, and he's got a cool new company that may make him super rich, but he didn't get rich. Why? Because TCP/IP, you couldn't own it. So who got rich? Zuck. How did Zuck get rich? He gave y'all a product. They told it was free. By the way, if the product's free, you are the product, right? There is no free. You are the product. And so they steal your information, and then they sell it. It's like people who do the DNA thing, right? I tried the DNA thing because I have a last name Yusko. It's a weird name. I want to know where it came from. So I paid the money and got it. And they told me I was from Eastern Europe. I'm like, really? I knew that. I want to know where in Eastern Europe. And then I realized they sold my DNA to Merck for $1,000. Well, why didn't I sell my DNA to Merck for $1,000? That would have been a better deal. So the key is that that protocol stack, or no, that ownership of TCP/IP you couldn't own. So you had to own the applications. In Web3, we can actually own the protocols, right? Bitcoin is a late stage venture investment. Ethereum is a late stage venture investment. Polkadot is a late stage, actually a little earlier stage venture investment. It's like owning venture stage companies in a liquid public market. That's why I get so excited. And that's why I went from spending none of my time on this 8 years ago to almost all my time today. And people say, Mark, you're a freaking idiot. Why would you give up a regular, real business to go hang out with the crypto kids? Like, one, I'm having more fun today than I've had in 20 years. I love hanging out with people like you guys that are passionate about something that get other people involved. 2, it is world-changing opportunity. And to be part of that is really cool. And 3, I get finance, right? I've lived finance my whole life, and I can see the writing on the wall that if we don't adjust, right, I could be the street sweeper, right? You guys probably don't know, and listeners probably don't know, why stoops in downtown New York are 9 feet above street level. So if you go downtown in the Wall Street district, the stoops, the doors, are 9 feet above street level. That makes no sense. Well, yes, it does, because of horseshit. because when you had horse-drawn carriages, you pushed the poop to the side and it stacked 4 feet high, and the ladies didn't like their dresses dragging in the poop. So they built walkways 9 feet high, which were kind of a bitch if you got drunk at night and fell off into the poop. But you walked 9 feet above street level. So the cars would be on the street with not the cars, the horse-drawn carriages. So when the horseless carriage came out, what did the street sweepers do? They passed out pamphlets saying, if you get in a car, you'll die. No, right? They spread FUD, the original FUD, fear, uncertainty, and doubt. It's like when my father-in-law left the safe job at the train. My grandfather-in-law left the safe job at the train to go work for that upstart American Airlines. And his parents were all apoplectic. Like, why would you do that? And so the reality is that the train companies passed out pamphlets saying if you got on an airplane, your body would cave in on itself once you went past a certain miles per hour. Ridiculous. FUD. So what I love about this is only twice in my life, in the 90s, in the mid 90s, and now, have I seen a migration of talent. The people on this call, you guys, the quality of talent that is migrating from real businesses, consultants, investment banks, technology companies, law firms, going into, back then it was the internet, right? Where you were stupid to go. Now it's crypto where you're stupid to go. But you're not stupid, you're brilliant. In fact, I gave it right before the lockdown happened. I gave a keynote in New York at a crypto conference. And this guy comes up to me afterwards and says, "Oh, could you call my mom?" I'm like, "Sure, why?" It's like, "Because she thinks I'm an idiot. I left this job at the law firm. I'm working for this crypto company." Yeah, I'll call your mom. And I'll tell her that, yeah, you are doing the really smart thing because this is the future. And if you want to be part of the future, you have to leave the past. The problem for most people is they can't give up what they're anchored to in order to pursue the new. I'll give you a perfect example. So when I was growing up, you guys won't remember this. No one on this call remember this. There was a show called Happy Days. And it was this silly show on Tuesday nights. And I would run home. So I was sitting at my TV tray at 8 o'clock on Tuesday night so I could watch Happy Days. And ABC owned my eyeballs. They owned my lifestyle. I moved my life around to be where, and they lost it all. They had all the market cap. They owned all the content. They owned my eyeballs. And now Netflix has that. How?
Wow.
Because they wouldn't give up the ad-based revenue model to go to subscription. So
Mark, I love that
will
story.
always lose, and they'll always be disrupted because they don't want to give up what they have in order to create something better.
I like that. Mark, those are some great insights, and thank you for sharing those stories. I learned a lot. We're going to everyone, thank you so much, Mark. There's a lot of comments and questions in the chat, so feel free to stick around. People are asking everything from what is that treaty you're talking about?
Mark, what is one last closing insight note? That was extremely just energetic and actually got me motivated for what the future is.
Look, I think the most important thing is to act, right? There's a lot of people who talk. There are a lot of people who think big thoughts and have good ideas. But the most important thing is to act and to live life outside the comfort zone. Look, I'm a biology guy. I studied biology and chemistry in school. And in biology, there are only two states, growth and death. Prefer the former, don't like the latter. But growth requires pain. Think about working out, right? Your muscles, if you're not in pain, then you're not working out very hard. So in life, if you stay where it's comfortable, if you stay in the middle of the herd, you'll just get mediocre results. If you go outside the comfort zone, if you make an investment and you feel good about it, you will lose money. And if you feel really good about it, you'll lose a lot of money. If you make an investment and you feel a little sick to your stomach, you'll make a lot of money. And if you feel really sick to your stomach, like buying Bitcoin or Ethereum right this second, you'll make a lot of money. Because that's where the magic happens, outside the comfort zone, when you're growing, when you're feeling that pain. So anyway, that's my last word.
Mark. That's a good segue to our next panelist, who is a TED speaker about healthcare and how it's being worked in a blockchain.
All right, thanks, guys.
So Mark, thank you.
All right, I'll hang out a little bit, but good to be with you.
Okay.
Thank you, Mark.